Happy Monday, everybody. Isn't it so much fun to invest in cryptocurrency? This is what's going to make you rich, they told us. Just got off the phone with Binance. Their engineering department is furiously at work attempting to fix the green button. Apparently, the green button has actually been broken for the last week, and that's what the problem is. So don't worry, Binance engineers are on it. They are aware, and they are trying furiously around the clock to fix that buy button. But in all seriousness, welcome back to the channel. Here's another crypto market update for you guys. Let's get right into the charts. Bitcoin's weekly candle last week did close bearish. It opened at a price of $66,676.88 and closed at $63,210 and a penny. That is a decline of negative 5.2%. This is Bitcoin's second negative close in a row. Now, volume profile analysis shows that Bitcoin has reached the bottom of this high volume node that we have been trading in since we achieved that new all-time high in March. A low volume node is below us, and it stretches all the way from approximately $60,823 to $52,581. And as we have seen many times, price moves quickly through low volume nodes to seek liquidity in high volume nodes. Thus, a sustained descent into the low volume node is going to shatter any realistic expectations of support until we reach the $52,000 zone. Now, there are small bumps within that volume profile. For example, here at around 59,421 down to about 59,100. And then another bigger one around 57,564 to about 56,822. Those are going to serve as take profit targets for short positions or potential bounce zones for quick counter trend longs. Now, price is currently trading at and trading below the weekly 21 exponential moving average, which did serve as support in our last encounter with it the week of April 29th. Following that test, Bitcoin was able to successfully rally about 27% to form a higher low within the range. Now, the weekly volume delta indicator also shows that while sell volume has been and is still dominant, that delta is decreasing. The difference between the buy volume and the sell volume is diminishing, meaning that buys were more prominent last week than they were the week before. And so far, they've been more prominent this week, even with this climax of selling pressure that we've potentially seen. Moving forward, this is a metric that I will be closely monitoring to gauge the potential for a reversal. Now, Bitcoin's 3-day chart does, of course, give us more clarity. Volume delta on the 3-day has actually increased over the last 3 days, culminating with this highest sell pressure that we've seen in over a week. This occurs, of course, as we test the 3-day 55 exponential moving average, which, similar to that weekly 21 EMA, did result in a pretty impressive 27 to 28% bounce the last time we came close to it. I will note that 3-day time transformation, one of our proprietary indicators, is very close to being oversold, and we are lower than the last registered low of time transformation on this time frame that occurred back in January of 2024, the bottom of this kind of opening year slump. Now, in my experience, high sell volume coming into an area of support often results in a temporary reversal of price action. The daily chart shows us that we are also very close to, and perhaps have already tested, the 200 daily exponential moving average, a level that we have not tested from the upside at all this bull run. Now, volume delta shows overwhelming sell pressure that we have not seen since the last bottom back here on the 1st of May, which again resulted in a 27% bounce. A time transformation itself is oversold to a degree that we have not seen since the last market cycle bottom in August of 2023 as well, I will point out. On the 4-hour chart, we can see that we have tested this long-term and traded below this long-term period of resistance right here. And we have registered such high sell volume that we have not seen since June 7th, which of course was the bearish engulfing candle that began this downwards trend in the first place. Now, moving to USDT dominance, we can see that on the weekly chart, USDT dominance is in the process of confirming a double bottom with a higher low, or more commonly, a W pattern. All right, that gives us a neckline right here. And if we are able to close above this, that will be a confirmation of this chart pattern. And we would be looking for a conservative measured move of an additional 20 to 25%, and let's just be conservative and say 20%. That's going to be putting us back up above 6 to 6.5% of market capitalization for Tether. And certainly, just like we saw this double top confirm the top for USDT dominance, this was the beginning of the bull run that we've just seen, this bullish cycle. This is kind of the inverse of that. Now, looking at the positioning to and from exchanges, we can see that there has been a net outflow of coins from exchanges, okay? That outflow has been decreasing as price has been going down. We, of course, do not have the data from today. There was a brief surge of coins flowing to the exchanges in this dip that we saw. But ever since we peaked and have begun this most latest bearish rally, there has been coins actually flying off exchanges in net. Now, this is long-term bullish. This is long-term bullish, but it's not a short-term indicator of price action. We can look at net flow volume as well. This is exchange net flow volume to and from exchanges. So we can see the volume of those movements as well. And we can see here that over the last few weeks, it has been outflows that have been absolutely dominating in exchange flow. Although there was this biggest price surge at Bitcoin's latest high. Miners are also selling, and they have been selling for quite a while, as we can see, with them only buying a little bit on this brief dip that Bitcoin had. We can see that this trend of selling is actually intensified, and there is no indication inside of this trend reversing just based on my analysis. The hodler cohort is also selling, ladies and gentlemen. We can see a brief period of accumulation during Bitcoin's latest dip back down to these levels, but they have been absolutely selling with no abatement of that selling pressure whatsoever. As we can see, these dips, once the trend of miner selling does start to decrease, we often see short-term reversals in price, but we don't see anything like that. So in conclusion, although short-term price action is indicating that we have potentially reached an important level of support, psychological support at 60K, and selling pressure does seem to have reached a climax, there is insufficient buying pressure on chain or any clear signs of bullish conviction to justify more long-term spot entries into Bitcoin at this point. I think that investors or long-term holders or positional traders should continue to sit in cash, as I have been advising for over a month, and await better buying opportunities. And if you're a short-term to medium-term trader, there are signs here of a potential bounce, but you want to be very careful with your positioning, be very careful with your exits, really temper your expectations. And if you're being very short-term, you got to be surgical. In my experience, counter trend trading this over the last few weeks, you get about 1 to 3 hours of upside, limited upside, before the next wave down. All right, so be safe out there, everybody, and I'll see you tomorrow.